We had the PPI wholesale inflation data. It was a big miss. I'll talk more about that towards the end of the video. Show you the numbers. Talk more about Powell at the end of the video as well. What he had to say. Rush to cut. No hurry. Should be. Recession coming. The Fed making another policy mistake. Just like inflation is transitory. Remember, Powell saying this. Be blindsided by the recession. They were blindsided by inflation. The Dow down 207 points, down nearly 0.5%. The S&P, again, still down below that 44,000 area after reversing off of it. The S&P turning off of that 6,000 area, still down 36 points to 59.49. Still think we'll see all-time highs on the S&P 500. More about that in the video. NASDAQ down 0.64%. The Russell down 1.37%. The VIX up 2%. At 14.31. Presidential election results, the VIX gapped down. I talked about this before. Again, if we bounced off the 50 period with the S&P, that we could drop below the 50 period here on the VIX. We did the green line there, but the 50 still above the 200. Warning again, we're likely in a topping process. Once we reach my target level and hit that trend line in the monthly time frame, which we're still below it, we still haven't reached it, likely peak and turn, and we may even overthrow it, like I said, going into the 6,100 range. But we'll probably get a bigger pullback based on what we're seeing and what you'll see in this video. And I'm turning bearish on the intraday charts. Opens the door for it, a red awesome oscillator bar in the daily. We may jump back up above the band here to test the 10 or the 20 period moving average, and then we'll see the S&P move to a new all-time high, which is what I believe is going to happen. Stochastics become oversold, it'll probably turn back up. We'll get a on the VIX and then push back down as the S&P tries to make one final high in all likelihood. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please support the channel. Take a moment to do that. I would really appreciate it. I do need to hear from you. I just put it all out there for free and ask that you do what you can to help, than get sponsors and try to sell you a bunch of junk you don't need. So please consider helping out. Follow the link below to take you to a secured site. You could donate any amount you want. I thank you for your consideration for that. And again, it's a NASDAQ weekly chart. I want to continue to point out up near the monthly trend line, below it, fraction really below the weekly trend line. And as we're getting this 9 count on QQQ. NASDAQ 100 didn't get it because QQQ is the tracking for NASDAQ 100. NASDAQ 100 goes below the bar over here from 4 weeks ago on this bar 8 right here, the sell-off. QQQ did not. QQQ did get the 9 count weekly time frame. The one over here gave us the high top and the 16% sell-off. Another one here, and this was at those trend lines of resistance. Remember, this is why I thought there was a top on July 10th, why I called that for this week right here. Right there. 9 count, we went a little bit higher. Here we got the 9 count, we've gone a little bit higher. May go a little bit more higher, but again, this is showing price exhaustion. Had the 9 count show up on the S&P, we've gone a little bit higher. It's common to this 9 count that is formed in the weekly time frame as we're right there at the resistance level on the NASDAQ in the monthly and the weekly time frame. In yesterday's video, to be watching the 5-minute chart, we had gotten the back above the 200. We closed just under the 200. I told you to be watching. Do we have the 50 stay above it and see price get back above the 200 period, or price hold below it and drag the 50 period back down? And again, I talked about on the 60-minute chart, do we get a bigger pullback or a more shallow pullback? And I talked about going to the gap support or the gap fill area if we got a bigger pullback happening. We're coming back to gap support on the 60-minute chart. We had initially tried to get a pop, but stalled at the 200 period moving average, and then eventually went lower. The 50 crossed back below it, and up this trend line here today that, again, I'd say yesterday, that back up to with Powell and turned down off of and went and made new lows, the lows of the session, Powell's speech and Q&A. Little divergence there, but it only gave us a bounce back to the 50 and the trend line, and then we resumed again these short-term divergences, short-term price fluctuations on the intraday charts. See that on the MACD right here and on the RSI. Sold off on the inflation data. Another sell-off with Powell telling us the Fed's in no hurry to cut rates. It should be. We're about to have a recession. In any hurry to raise them either, because telling us inflation was transitory. Now they're doing the complete opposite of what they did. Should have been raising rates aggressively to stop the inflation that they caused for QE and enabling the government to pass out $6 trillion in checks. That the government caused the inflation. Now, again, as they were in no rush to raise rates, now they're in no rush to cut. Should probably be cutting more aggressively because we're about to have a recession. What happened today, we sold off, again, the 50, green line here, still below the 200 period, and again, price holding below that 200 period through the session. I told you in yesterday's video, again, if we got a bigger sell-off, that the rally would fail and that we would go towards support and the gap fill. 60-minute chart had a more mild pullback. Got to get price above this 200 and remain and get the 200 turning back up, with the 50 holding above it. So this is what I told you to be watching for in yesterday's video. Let's take a look at the 60-minute chart. I told you if we held below that 200 period, it was the door for a bigger pullback. A pullback, but again, I told you it could be mild, it could be a deeper pullback, but when it's done, we're going to go, in all likelihood, make new all-time highs. I told you in yesterday's update that, again, we tried to break this trend line right here. And again, over here, I told you, hey, going to get a pullback. We were at extremes. We had a Class B divergence. I was correct. I don't know if it's going to be a mild pullback or a deeper pullback. The same thing I keep saying every single video since predicted we would get the pullback. I was correct. But again, here we had an extreme. When I said, hey, we're forming this bullish divergence at an extreme. Going to get a presidential rally, be a rally with the Fed along with it. At extremes. Up here, we were at extremes. Here, again, dipping below 50. So again, that is telling us, hey, we're going to get this bigger pullback. So I'm looking at gap support right here, which is what I talked about yesterday, the gap fill down here. I told you to be watching the 50 period and the gap support level started dropping below our previous low over here. That scenario is now happening. Now, again, I'm still predicting we're going to move to a new all-time high. I still believe that a larger divergence is under construction. We'll get retail sales next week. We'll get the NVIDIA earnings. I told you, I don't know what the catalyst is going to be. Is it going to be the inflation data? Nope. Told you, will it be Powell? Nope. Things produce sell-offs. Retail sales tomorrow, then NVIDIA earnings next week. Now, if we go beyond this gap fill, again, you're going back into the cloud. Here, deeper into the cloud. You'll be in it if you try to fill the gap here, moving beyond gap support. And then I'll be looking at this gap support, which was the gap with the presidential election results. So again, just some gaps I'm looking at, and the gap fills. Get a really deep pullback. We can pull back here to the gap support right here from the presidential election. Not as deep, filling this gap here, and then right here we're at gap support. Possible bullish falling wedge forming. We'll be watching to see if that is, but I still believe that a divergence is going to form here eventually. S&P is going to move towards my target level, that mid 6,000 area, and as high as 6,100. So into the 6,100 area, into the low to mid to high 6,100, and overthrow the trend line in the monthly time frame. Is what I'm trying to tell you is, again, dropping below 50, so again, we're getting a deeper pullback. If we can get back above the 50 level on the RSI, then this could come to a conclusion. Still think a divergence is likely going to form here. Probably going to get another push higher before it's all said and done. Looks like we're getting the deeper pullback. Again, when it's done, I believe we'll go to new all-time highs. This signal was correct in predicting the rally ahead of the presidential election. This signal was correct predicting the pullback before the advance resumes, in my opinion. Divergences, even the one back over here, they've really served us well here in the 60-minute time frame. We had that key support here. We were bouncing off the 50 period. We had this bullish divergence, likely rally towards the trend lines, and we can even throw them again. We haven't hit my target level, the 60 or the 6,000 range. We've come up to it now. An intraday push above it, then we had a close above it. Now we're turning off of it. We're likely going to revisit that level with the divergence at some point, in my opinion. Predicted the pullback. We're getting a pullback. I told you I didn't know if it would be deep or mild. Looking at these support levels, the 50, we've now taken out the 50. So again, risk now being below the 50 of a bigger pullback. See what happens with retail sales tomorrow and on into next week with the NVIDIA earnings. NASDAQ doing the same thing. 60-minute chart. We took out the 50 period. Again, tried to break out. It failed. It was a fake out. False move. It was a head fake above the trend line. Again, had the divergence over here. Down here, we had a divergence between the S&P and NASDAQ. It got a higher low. And again, I told you that we are likely going to see a presidential election rally because of that and the bouncing off of the 50-period moving average down at these lows over here on the daily charts for both of them. Again, here we are, right here at the gap support area. The gap fill is down here. Again, we can move just beyond that, go towards deeper into the cloud. And then if we go further than that, you have gap support down here. So we'll be watching these levels very closely. Said again, I believe S&P will move to a new high, but often NASDAQ and S&P diverge at turning points. So again, watching the next rally closely. Does this peak hold and we see them diverge? Or does NASDAQ go a bit higher? It's just underneath the monthly trend line, but it's reached the trend line as I've talked about yesterday. With the sell-off, it could get bigger because we had the red bar show up today on the Awesome Oscillator. Here it is on the S&P 500. And with yesterday's bar, we're moving just above this peak right here. I told you that, again, before we ever got the green bars over here, I told you I thought a divergence would develop. Told you I thought we would still move towards my target level. Bounced out the 50 period here on the S&P daily, and we got this. But the yesterday's bar is moving now above this level here. So again, it's likely we're going to see a brand new divergence develop here in the more recent price action. The Awesome Oscillator, maybe on the MACD, you get a red bar. So again, we're risks now of seeing a deeper pullback. Start pulling back to gap support with the presidential election results right there. Again, that's where the 20-period moving average is. We'll be watching some of this. If we take out the lower boundary of the cloud right here, it will flip back to red. That would be coming back and actually filling the gap down here. Don't know that we go that far, but I do believe we will move to new highs once this pullback is done. And again, be watching to see if we get a couple more red bars or not, or do they just flip right back to green immediately and you get more of a milder pullback rather than more aggressive. I think this dip is going to be bought, and again, see how deep it goes, but the red Awesome Oscillator bar is suggesting momentum is waning a little bit and we can get a bigger pullback. So we might see a divergence on the Awesome Oscillator form in the more recent price action right here, since this bar went just above this bar over here. Get a brand new divergence that develops on the Awesome Oscillator. Thing with the NASDAQ here. Now again, things are still bullish. You still have a green cloud. You still have blue bars, okay? But you're getting the red Awesome Oscillator bar today, suggesting that we're going to get a bigger pullback. Again, if we pull back to the gap higher with the presidential election, you're pulling back towards that 20-period moving average. You would have to go beyond that to fill the gap down here in order to flip this to red. So again, we'll see how big of a pullback we get. But the Awesome Oscillator and on the NASDAQ here and the S&P suggesting, hey, maybe we get a bigger pullback rather than a mild pullback. So we'll be watching a pullback. But then again, S&P will move to new highs. NASDAQ, well, see if they diverge, or if NASDAQ goes to new highs as well, still can. But I told you I was watching for clues. 5-minute chart of the S&P, if we were going to get above that 200 or remain below it, we remain below it, bigger sell-off. Now we get these signals here in the daily time frame suggesting, again, we've got possibly a couple more days of selling pressure, and then we'll see if, again, we can rebound on the S&P to new highs. In addition to the Awesome Oscillators turning bearish and remaining below the 200 on the 5-minute charts, NASDAQ and well, then now we're seeing momentum shift in the intraday time frames. About again, a possible bigger pullback. Have the RSI up here, and again, I talked about it coming down further. Now, momentum, the momentum line here in the intraday time frame is turning down. The trend signal is still bullish, but it could change, and again, we could get a bigger pullback. I mentioned to fill the gap here, or to gap support here, or even something bigger to fill the gap down here, but I don't know that we get that big of a sell-off, but I do think we will likely see a larger divergence develop over here, like these other tops that formed these divergences will eventually push back up. So we'll see what happens. Red awesome oscillator bar goes away, and we get a green one tomorrow, and we find a bottom around gap support, or maybe a little bit lower at the gap fill, then be it. But again, it could come down to this next gap support area or gap fill area. So we'll be watching these gaps closely. Momentum shifting today, along with the awesome oscillator getting red bars, suggesting we're going to get a bigger pullback. Let's see signals change back to bullish. And I'll be watching, does the trend signal change on the intraday charts? That would suggest a bigger pullback if that happens. And then I would be looking at the gap fill, or gap support down here. If that is the case, possibly filling this other gap from the presidential election. We'll be watching. But momentum flipping today. Intraday. Same here, but again, trend signals still bullish, balance of power still positive at this point, but again, momentum shifting, at least for now, on these S&P 500 intraday charts. Yesterday I talked about the daily chart, and again, momentum here still being at elevated levels. I told you it could turn down if we get a bigger pullback, and again, eventually form a larger divergence. I'm going to be watching the gap here, going to be watching the presidential election result gap here, and that gap support. Now, again, this is turning down. We've talked about the previous two sessions in the videos. Now, the momentum line has turned bearish on the intraday chart. Is still bullish here, but we are getting a warning sign of a potential short-term top, marking this as a short-term top, which I warned you about back when it was topping with the 60-minute chart, the negative divergence that formed. Again, this is suggesting we may see a bigger pullback. Be watching these gaps very closely. Momentum is still bullish, the trend is still bullish, but you got a warning sign. Now again, that's the only signal I have. So again, we're probably going to pull back and still go to a new high. Again, these other signals, they marked pullbacks right here. Signals in July marked a bigger sell-off. Bullish buy signal just before the presidential election results there. So again, those do a pretty good job, but right now we're getting this warning sign, so we could see the momentum line turn here. If the momentum line begins to turn bearish here in the daily time frame, then again, you could get a bigger pullback. So we'll be watching these gaps closely. I warned you about this getting a bigger pullback. Momentum, I also talked about same thing for the NASDAQ, and again, see a larger divergence in this more recent price action. Momentum, we're seeing something similar with the RSI, MACD on the daily chart. Now, today we got a T again, go up at major turning points and short-term tops. The only signal I have. There's no circle. There's no other sell signals. Other ones, again, the sell signals here, they just gave us these pullbacks, talked about at the time, and again, gave us the breakdown of that rising wedge, but there was no confirmation of follow-through. I talked about all of that at the time. Again, that's why I expected a presidential election rally, bouncing off those 50-period moving averages on the daily chart. Again, if momentum starts to turn bearish, the momentum line here on these daily charts, we could see bigger pullback, and if so, again, we'll be watching these gaps, gap support. Again, what momentum is doing here, it looks very similar to what we have on the MACDs and on the RSIs. Now look at the daily chart of the NASDAQ, and again, look at the RSI. We had this divergence, we turned down, we broke this trend line, but there was no confirmation follow through, and we bounced just above the 50. The S&P also bounced off the 50 period, and we had a divergence between them at that 50 period. NASDAQ got a higher low, the S&P made a lower low. We got the presidential election rally along with the Fed, and we came up and we hit this trend line right here. You have this rising wedge. This might be a top, possibly be a top. hitting the weekly trend line of resistance. Just above it, though, there's that monthly resistance. Rising wedges sometimes get an overthrow. We'll see what happens. But again, look at the RSI. It looks very similar to momentum. Again, a little bit higher, and it's now turning down. So it wouldn't be surprised to see a divergence or a confirmation of a lower high. Back over here in July, I told you to be watching for the same thing. I told you that I thought that July 10th was the top for NASDAQ. I was right about the peak, but we still ended up going a little bit higher. Predicted that S&P had moved to new all-time highs because I thought we'd come back and fill this gap at 20,400 here. And I kept saying NASDAQ's going to go back and fill the gap. He's going to make new all-time highs. That happened, but then I told you if I was wrong about this being the top, we would go up and we'd hit the trend lines just above this level in the weekly and the monthly time frame. We're doing that now. We're just under the monthly and pretty much right at the weekly trend line. Those trend lines to call this top right here, and that was correct. We ended up dropping nearly 16%. So we're back near those trend lines. We're going to either see something like this where we see a sell-off, but then we come back up and we get a lower high and we diverge with the S&P, and then the S&P made a slightly higher high there on July 16th, a few days after the July 10th peak for NASDAQ. I think you could see something like that if this is a peak. They both get a divergence. Maybe we sell off and then we come back up. We back test this area right here on NASDAQ, fill this gap. We back test it, we hit our 10 period, and we bounce, and we come back up here, and we go a little bit higher, and we just slam into this trend line again and move towards that monthly trend line on the monthly chart. Is just directly overhead. So again, and that could form a divergence right here. So do we get a divergence like this, or do we come back up and we get a lower high if we get a bigger sell-off? Now again, if we don't find support here, again, you've got the gap support here, the 20 period moving average, and then you got this gap fill way down here. But again, we have this trend line now connecting that low with the August low. So just some things to be watching for. Again, do we get something like this, or do we get a divergence on the NASDAQ? The RSI looking very similar to momentum, and so is the MACD. The MACD, again, looks like it's going a little bit higher than these levels. So again, we might see a brand new divergence develop here, or a confirmation of a lower high. Now, so far, today's rally, we've come back to this trend line right here from these highs. We pushed above that after the presidential election rally with the Fed, and that's where we're at right now, and that is gap support. So if we break that, the 10 period horizontal support from the July peak, and then below that, the 20 period, and again, this gap support area down here with the gap higher from the presidential election results. NASDAQ daily chart. I say it's possible NASDAQ peaked. We did slam into this trend line right here. Again, this is a nice looking parallel channel. We may overthrow it though a little bit. That's possible. Is a bearish divergence present. Rising wedge on that daily chart. If we start to turn, watch to see if we take out the 20-week moving average and drop below 50 on the RSI. That would be extremely bearish if we did so. During the run-up, we've had the 50 level act as support. Just violating it have marked important bottoms and bouncing off the 20 here just below the 20. But again, the RSI coming to the midpoint, the 50 level, and then turning back up, coming to the 50 level, turning back up over here, coming to the 50 level, turning back up here, slightly below it, coming to the 50 level, turning back up, bouncing off of the 20 or slightly violating it. If we take out the 50 and take out the 20, you'll get a 20-50 sell signal dropping below the 50 period, dropping below the 50 level on the RSI and holding below it, change in behavior, and that will validate a reversal and likely mark a major top for NASDAQ. The diversions play out. The diversions may not be done yet. NVIDIA earnings next week, so we'll be watching. Like I said, we still may overthrow this level, but just something to pay attention. You want to know the turn is going to be validated in the weekly time frame. You'll get this 50, this 20-50 sell signal where you drop below the 20, you remain below it, like we did over here. We drop below the 20. We drop below the 20 here. Side drop below 50, and it remained consistently below the 50 level through the decline until we got back above it here at the bottom. So again, 20 50 signals, the bullish and bearish signals, and then the 50-50 signals using the 50, looking at that longer term trend, the 50-week moving average and the 50 level on the RSI. Both the 20-50s and the 50-50 buy and sell signals. And obviously coming back, taking out the 20 and breaking this trend line right here, that would do severe technical damage for the NASDAQ, and eventually moving back towards this trend line down here near the 14,000 range. See what happens at this upper boundary channel line. Still think S&P will make new highs, but like I said, sometimes NASDAQ and S&P diverge, sometimes they don't. Back at the 2022 top for the S&P, NASDAQ diverged with it. It made a lower high. It already peaked in late 2021 in November. Same thing with the S&P. It's selling off here. Again, we have the divergence. We're throwing this trend line. I told you we could still move to this trend line and still reach the trend line in the monthly time frame. We have not reached that trend line yet. We still could. My guess is we will. The same thing I talked about with NASDAQ. Same thing here with the 2050 sell signal. That's going to really confirm the divergence playing out when we see I drop back below 50 and having the divergence has been present in the uptrend, and then again when we got the top over here, we moved into levels below 50. We had pull-ups to the went too far. We had pull-ups to the 50 level, but those were the counter trends, and then finally bottomed out, got into positive territory, danced around a little bit, went sideways. But again, you can see what I'm talking about, how in the weekly time frame being above 50 or below it, find the uptrend or the downtrend. You're hop, skipping, and jumping above and below it. You're kind of going sideways there. And here I've color-coded the trend on the RSI. Same chart though, pretty much. Then the daily chart on the S&P 500, again, bouncing off horizontal support, bouncing off the 50. I told you we could rise back up and back test the trend lines. We're through the one that we broke that was never got a confirmation or follow through. This one got confirmation but no follow through, and we overthrew that. I talked about still move to new highs, still move towards my target level in the monthly time frame. 6,000, 6,100 if we overthrow the trend line. See if a divergence develops here on the RSI. Did back at the July peak. Again, NASDAQ got a lower high, S&P got a higher high, had a divergence. Again, told you about this sell-off before it happened. Called a bottom with the jobs report. Predicted the S&P would still move to new all-time highs. Because NASDAQ didn't bother filling the gap until over here. And then I told you to be watching for a topping process as we approach that monthly trend line that we've talked so much about. So MACD still has a divergence developing right here. NASDAQ's MACD has gone a little bit higher. See if we get a bigger sell-off or not. And again, just watch these gaps on the S&P 500 and the gap support. Where gap support up here right now, we could fill this other gap or go to gap support down here. You get a bigger sell-off beyond the 20. You get this gap down here. I don't know that we do that, but this is done. And I told you to be watching. Is it going to be a mile? I told you we'd get a pullback. I was right. I told you I didn't know if it would be a mile pullback or a deeper pullback. We could get a deeper pullback if we attempt to fill this gap here or go to gap support down here. Like I said, when this selling's done, I do expect the S&P is going to go make a new all-time high and probably complete the top. Now, yesterday we got the inflation data, the CPI inflation data, came right in line with expectations. S&P was pretty much flat for the session. Today we get wholesale inflation. The PPI came in hot. The market sell off, back testing our recent lows and then now taking them out. We had Powell speak initially right before he spoke. We tried to get a bounce and then the market sold off further. More about that shortly. Concern is that the wholesale inflation will eventually spill over into the CPI. It will be passed on to the consumer. That's the concern. And again, let me just say this. A lot of people are looking at this and saying, okay, this is evidence now inflation's going to come, roaring back. Even Powell, repeating his phrase that he said before the Fed started cutting. Oh, no rush to cut. Actually, that's what he said today. More about that in a minute. But again, when the Fed should be worrying about the deteriorating labor market, they're worrying and looking at inflation. This recession's coming, and the deflationary forces will be at work. By the time the Fed realizes we're about to have a recession, it will be too late. Nevertheless, I digress. Over month came in 0.2%, in line with expectations. The core month over month came in a little bit higher at 0.3%. Supposed to come in at 0.2%. The year over year number was a miss. It came in at 2.4. It was supposed to come in at 2.3, higher than the 1.8 from the previous number with the headline number. The core also came in above the estimate at 3.1%, higher than the 3% and higher than the previous reading at 2.8%. So again, a big increase the previous month with the wholesale inflation, and a miss both the headline number and the core number on the year-over-year basis. It was a hotter report, big miss after, again, the CPI came pretty much in line with the expectations. Now, Powell gave a little speech today and had a Q&A, all repeating what he said. Powell says that the Fed doesn't need to be in a hurry to reduce interest rates. Powell said the economy is not sending any signals that we need to be in a hurry to lower rates. Like the Fed was completely blindsided by the inflation. They told us, oh, inflation is transitory, inflation is transitory, inflation is transitory, over and over again. No rush to raise rates. You see inflation come in and surge to 9%, and I mean, the Fed was completely oblivious to the inflation issue. They caused it, by the way. Taking credit today, oh, when we saw the inflation, when they finally saw the inflation, they reacted forcibly. It's taking credit. First of all, they caused the inflation. They helped cause it. So did the government. They were blindsided by it for the longest time, telling us it was transitory. Taking credit today, oh, we responded forcibly and we're here to